The outlook for Tata Motors has been severely revised over the last week on the back of the Brexit finally reaching an agreement with the European Union regarding various policies. Now, the EU-UK Trade Deal and Cooperation Agreement is what it's called, and it's basically going to ensure that any companies will be able to trade freely in goods. That means zero tariffs. And this removes a key potential risk factor for JLR, which can now continue to export and import its vehicles between the UK and EU without additional costs. Now, while this free trade agreement is now subject to rules of origin requirements, brokerages and particularly CLSA are of the view that JLR is largely compliant. So given that the Brexit overhang is no longer a concern on the base of the costs or the cost profile of this company, they are of the view in CLSA that the focus for investors should now shift back to the volume recovery and the product mix and how that's going to change across various geographies. Also, JLR's cost reduction initiatives have been a key factor over the last 9 months. Of course, that China volume continues to do very well. Their UK-EU business has been suffering a bit. They now believe that that should also turn around. Now, there's a little disclaimer there. Of course, the UK has just experienced a new strain. We've seen a new wave of lockdowns, and in some countries in Europe as well, the second wave or third wave, if you want to call it that, is creating some serious problems. But they believe these are, broadly priced in. They're short-lived, and that once the vaccine's administered on a large scale, it'll no longer be a concern. So on the back of that, they're anticipating significant volume recovery for JLR, and they believe that higher volumes coupled with the cost-cutting initiatives will lead to severely or rather significantly increased FCF generation. So that's free cash flow generation, which will essentially create cash on the balance sheet, which can be used to delever. We do know that Tata Motors has committed to deleveraging the balance sheet, and this might just be the trigger that was required to speed up that process. On the back of that, they're actually revising their target price upwards. Tata Motors currently today has had a very good trade in day in trade. It's moved from 175 bucks at open to around 183 rupees and was a top gainer on the Nifty this morning on the back of this Brexit overhang disappearing. But brokerages are more positive. They believe targets should be as high as 220 rupees. CLSA perhaps the most bullish on the street with a 220 rupee target. So, of course, this was a major overhang on the EU-UK business. China has been a better market, and they have been doing fairly well there. So if you put all this together, it seems that there might be some re-rating on the cards for Tata Motors on the back of the Brexit deal now being concluded.